Hey, how's it going? So, if you've got an investing account or maybe a trading account or a savings account that you're hoping to one day use that capital to some point create wealth, you might be pleasantly surprised to find that there's really only 7 steps that you need to take in order to get that wealth going for you. And so, let me show you what those 7 things are. The first thing we've got to cover is gathering resources. That's step number 1. And this basically just means this is where you're pooling together your resources. You're trying to figure out where that capital to trade with is coming from. So for most people, that's going to be like a savings account. It could be an already existing investing account. It could be a 401k account, or it could be a self-directed IRA account. Usually there's nothing stopping us from coming up with something creative in order to find that capital with which to start. Now, step 2 is all about creating a team. When we're investing, usually the most important team member that we're ever going to have is our stockbroker or our trading broker. And usually there's other things too, like you might have an advisor, or you might have an accountant or a mentor or something like that. But usually, getting an investment account with a broker is pretty easy to do. You just kind of sign up and fill the forms. So most people are pretty familiar with that one. Now, step number 3 is going to be platform familiarity. I hope I've spelled that right. Probably not. But anyway, good to know you don't need to be good at spelling to succeed in this game. So anyway, step number 3 means that you actually know what you're doing when it comes to the software that's involved with your trading. So you know what to press, you know where to click, you know how to enter orders, you know how to exit orders. Basically, you're comfortable with the software that you're using to trade. Usually most people find that this process takes maybe just a couple of hours to get the hang of it if they're brand new. So again, not that hard of a step to master. Now, step number 4 is where most people start kind of freaking out, because step number 4 is obviously mastering market fundamentals. But what most people think is that they need like an economics degree in order to figure it out. Guess what? You don't need that. In fact, less than 1% of all the economic stuff you could possibly ever know actually will help you make any money doing any kind of trading. So that's why that's all we need to focus on, is that less than 1% to actually get going. And so you'll find that the money is really made in the final 3 steps. And so, of course, step number 5 being protecting capital. And the reason protecting capital is so important is, I don't know if you guys have heard of the great Warren Buffett, but he's famous for basically having 2 rules. And those 2 rules were, rule number 1, never lose money. Rule number 2, never forget rule number 1. And so obviously it takes a lot of effort and energy to build up that capital in the first instance. So you don't want to go into some kind of situation where you're losing it all in one go. So capital protection is probably the most important, or at least one of the most important steps. And so when we talk about capital protection, what we're really saying is, what are you doing to protect yourself from downturns in the market? In other words, are you running with a stop loss? Do you have a stop loss to protect your position? Are you using insurance for your shares? By the way, did you know that you can use insurance for your shares? It's called a put option, and a lot of people don't even know that it even exists, but it can actually help you out and protect you even during the worst market crashes that have ever occurred in history. So that's another thing to consider as well. Now, step number 6 is going to be asymmetric trading. And asymmetric trading basically just means, what are you doing to make sure that your trades have a higher percentage chance of winning? It also means, what are you doing to make sure that when you're wrong about a trade, you're only wrong just a little bit, but when you're right, you're really milking it for all it's worth. So that's asymmetric trading. And then finally, we've got step number 7, which is creating passive income. Now, passive income is the most important step, in my opinion, because passive income is the income of the rich. All the greatest investors and all the greatest traders make most of their money from passive income. So that's where you're not actually guessing what the market is doing. You don't even really care half the time. You're just creating passive income, and the passive income is usually, it's the lowest taxed, and B, it is the safest and the most reliable. So that's why we always strive to get to passive income stage of our investing pretty much as soon as we can. So yeah, hope this was helpful for you. If you like a deeper dive onto these 7 steps, we actually talk a lot about that in my book, The Rockstar Investor. You can get that book at therockstarinvestor.com. At the moment, we're giving it away for basically free. Just cover the small shipping and handling, and that book can be yours. Until then, see you later. Cheers.